Hi, I'm Grant from BTMA In this video I'm going to show you how to use the BTMA spreadsheet, also known as the Beat the Market Analyzer spreadsheet. Okay, so first page down here, first sheet we have is disclaimer. Next is quick start. So in the quick start you're going to see that you can go through your requirements here, help with installing the add-in. And then there's a video here, which is this video that we're looking at right now, how to use the analyzer effectively. And there will also be some tips on that sheet. If you click on this, it'll go to a web page as well to help you out. If you have other general questions about help and troubleshooting, you click here. And then to upgrade, get the latest version of the BTMA spreadsheet or the full paid version, then click here. Okay, next sheet we're going to look at is the single analyzer. Now the single analyzer, it'll analyze up to 13 stocks here, and the stocks are populated, the information is populated across each row. So this would be one stock, the next stock. So what we do is first we have to enter the stock symbol. So here, let's enter CVX for Chevron. And we can put a date. Here you can see the date is January 14, 2013. That's our start date, or the date we'd buy the stock. And then we must have an end date as well. And we have here 1 year later, January 14, 2014. So you can put any date here. It could be in the past or the present. Can't be in the future. But here, this one, the end date can be past, present, or future. So for CVX, let's just do from, let's say, December 22nd, 2009. And then, let's say, December 22nd. And it could be any date. Doesn't have to be exactly the same. Okay, 2012. Okay, next thing we're going to do is hit the Calculate button. And it will start to calculate and populate these rows. Okay, so you know that it's working when down here the processor has a percentage, and you can see it's starting to populate Chevron, and then it has the industry. Okay, so we're good. It loaded everything here. Here's our market price for the start date, $77.49. And our price, recommended price to buy, is $77.49, the same. You can see up here with Coca-Cola, market price was $36.99, and we are recommended to buy it at $26.12. It says, should you have bought this stock or not? So, yes, no, and it might say possibly. Gives you a reason why you should or shouldn't buy the stock. Okay. Then here it gives you a company rating. So each company will have a rating. Coca-Cola ranks 79.25. It's out of 100 points. Anything at 70 or above is considered a good company, potential investment. Here Chevron came up as risky during this time period because it lacked the ability to maintain price and or recover during economic downturn. So we know that the economy went down around 2003 and also around 2008 and 2009. So that could be a possibility because of that. Okay, here the actual return. So this one's in the past, so we actually have a return. It shows 15.79% annual return versus the S&P 500, which returned 8.55. So Chevron actually did turn out to be okay. And that's the thing with the analyzer here. It won't pick every single good investment, but it will help you to avoid picking bad investments. So it's very safe and conservative and gives you confidence to invest the way that you'd want to. Okay, so other things over here, save data. I'll go over that in a second. Here you have different scores. These are points. These are the total points, 17. Does the stock have a 10-year upward price per share? So if the stock is going upward in price per share over 10 years, then it will get a score out of 17. So Coca-Cola got 11 out of 17, which is not bad, and Chevron only got 7 out of 17. So it'll rank each stock according to these point systems. EPS, earnings per share, out of 16, Coca-Cola got 13.25, Chevron got 16, okay, out of 16. So here you can compare with each one. Ability to recover from market crash, return on equity, which is one of the most important criteria when evaluating stocks, and goes through and gives them each a point score. And it's really easy to understand. Instead of having a large like financial statement and trying to read all kinds of data, this puts it really easy into a easy to read format, makes it simple with the scores here. And you can evaluate any industry and compare each industry together. It doesn't have to be separate. Okay, gross profit margin, PEG ratio, and then there's our total points. And as you go to the right, it gives you more and more details. So EPS, 52-week high. You can see if it's consistently growing in earnings per share, 102, 108, 129, 125. So Coca-Cola is pretty good at continuing to grow earnings per share. Intrinsic value, what the stock is considered to be worth with Benjamin Graham's intrinsic value formula. Estimated value of the stock. Difference from the start date price and the 52-week low. Is it a bargain price? So Coca-Cola might be a good company, but it's not currently at a bargain price during this period. Okay, so this was our margin of safety price, 26.12. And then this is what it was at on the date we would buy at 36.9. So we can see that the margin of safety price is lower. So this is not considered a bargain buy. Okay, and just going over, this is the return. So it's broken up into different sections. We have our annualized return. Over here we have pricing. Back here we have stock value. Over here we have company rating. And those are the details. To the right, to the left are the more essential data. So it tells you, should we buy it, is it a good company, and is it at a bargain price. Okay. Save data. You can click here to save one row of data, or you click here to save all the rows. So we're just going to save all the rows. What this does is it puts it into our save data worksheet. All data that you analyze, you should end up putting into the save data worksheet and build up a file there. And then you compare everything together. It will compare, sort, and organize all your files according to best buys. If you ever need any help with anything, you can just put your cursor over top of the cell here, and it should show. It's loading right now. Okay, it has finished and put our data into the save data sheet. So it has added it down to the bottom here. Here's our Coca-Cola and Chevron. These ones here are just ones that I've already done, and I was just experimenting with before. So it puts them in order, and you can see that Microsoft is at the top. So the top ones are considered the better buys or safer values, and then down at the bottom are riskier or not as good buys. Okay, so if any stocks or rows are highlighted with this dark green all the way across, that means that it's a recommended buy. Should I have bought this stock? Yes. Okay, if any are in yellow highlighted all the way across, it means that it's possible investment. And then the white ones are just regular investments. And then down at the bottom you might see some red in some categories, which would mean that it's a risky investment. And let's just see here. Okay, so we can see this one's recommended, these are possibly. This just means that it's a good company rating. The green is good and the red is bad, risky investment down here. Okay, let's look at what else we have here. Okay, so we have clear individual rows, clear row range. Let's say that we want to get rid of Costco here. Costco is 17. So you can just click here, clear, and you can put in different, separated by a comma, different rows. We're just going to clear one, so 17, and do you want to clear it? Yes, so it'll clear that. Okay, and then if we want to reorganize, if we're missing some data here because we just cleared it and we ever want to reorganize, you can click sort by top rated companies. Yes. Okay, so you can see that it organized and sorted everything again, so no blank spaces, and everything's in order from the best buys to the worst. Okay. Also, clear row range, that does the same kind of thing, except you put a colon and it will clear from 8 to 22 or any rows that you want in a range. Okay. Next thing is export editable Excel file. So right now